Okay, and welcome back to another market review. Hopefully the quality is a little bit better than last time, and both the audio and video quality. I played around with things a little bit. I think there's going to be more work to do. I didn't like how the quality turned out on the last video, so hopefully it's back to previous video quality now. So what I want to do is just go over the market in general, from and what was how things have changed since the last time I did a market review. I know I was very correct on some calls, very incorrect on other calls, and then there were some calls that were sort of neutral. I didn't have a bias one way or another, and we can see how those things turned out as well. And really the purpose of these videos is partly for me to get better at my technical analysis and just see where my biases lie by reviewing and going, by recording and going back later. I can see where my biggest strengths and weaknesses are in order to hopefully become a better trader. And if anyone wants to see how things go along the way, then, it's made public for that purpose. So let's start with the broader market, which is the ES, or the S&P 500 futures. And what we can see is last video, my expectation, basically I made the video right after the market bottomed, or right when the market bottomed, October 28th, so the Saturday after the bottom. From there, we had a recovery and basically a straight rip to the upside. That's not something I expected. I expected maybe a rip, maybe a rebound up to around this level, but this rip has almost basically negated the idea that we have started a new bear market, as we are basically at equal highs to the previous July high, or the July top. So that's much different than what I expected. Why that occurred, I'm not really sure. I guess, there's always reasons for that you can give, and then there's what the market does. I think I was probably wrong to be so bearish in general on the market. Well, I clearly was wrong. The market didn't care what I thought. The market went where it wanted to go. Now, I think the most significant thing to see, at least on the chart, looking at the chart alone, is if we look at this long-term trend channel that the market has been in and has broken out of, basically, in the 2022 bear market frame. We made one attempt to recover, and we actually succeeded and then failed to recover that trend channel. Now we're making a second move up into the border of the trend channel, or to the lower trend line of that channel. And it looks like, for multiple reasons, this may be a potential short-term top. And, one thing we have is that basically momentum is running out. We're running out of momentum, and on the hourly trend line, or hourly chart, we have broken an hourly trend line. Today, yesterday, I guess, in terms of this chart, which was today in terms of a trading day, we had a big pop-up and then a failure. So a pop-up on good news. I think there was good macroeconomic data. The GDP number came in quite a bit higher than expected. I think there was another catalyst as well, like treasury yields falling, that made the market go up, but then it reversed and went down. And often markets reverse on good news, or at least they top on good news. So we've got several candles that might be potential topping candles The other thing is this potential trend line. Shouldn't, I mean, I call a potential trend line one that has only two reactions on it, or just isn't very well defined. So I'm calling this a potential trend line. We're also running up into this potential trend line. So basically there's three sort of indicators that show that this might be a potential market top. Now, longer term, if this stays strong, if it's just a smaller pullback, and then we eventually break into this trend channel again, then I'll be I'll have no choice but to become much more bullish on the market long term. In the meantime, this could be a major market top, or this could be an intermediate market top. The one thing I am confident is that at least for maybe 2 weeks, this is likely to be we're likely to see downside on this. If we head over to the SPY, we can see a little bit of a different perspective based on daily trading or market trading. Today we had, I guess this is what the candle looked like, basically a big gap up and then a failure back down to basically the level that it has been trading at for a while. So this looked like it could have been a bull flag just looking at the daily chart. It tried to break out, it failed. So that could be, traders, at least like the fact that it popped up or gapped up, could be people, institutional type traders, basically trying to top up so they can, pop it up so that they can unload on retailer trailer traders during the day. And that seems to be what happened, because we basically had a pop up, a gap up, and that was the top. And throughout the rest of the day, it sort of drifted downwards. So not a great sign if you're bullish on this. I'm going to take, well, let's not remove that. Okay, so that's these two. I also want to look at, I'm going to do a little bit different approach from the last video and try to be a little more organized about how I approach these charts. So if we look at ratio charts and look at the S&P or SPX to M2 money supply, SPX is just, I guess, the S&P index. They're all variants of the same index. We have, as you can see, this is where I looked at or made the last video, right at the bottom. My expectation was that it would be hard for the market to rally up and make a new high, given that we had fallen so far from the top. Clearly, that was misinformed, because we did rally up and make basically a double top here. So this is more evidence that, yeah, this is a potential area that we can sell off. If somehow we break through this to the upside with some buying volume, and you'd see the buying volume on the actual trading charts, not the ratio charts, then again, I would have to become bullish on this chart. And often, I mean, like, what you don't see often is, like, this is where my surprise is that you don't usually see such a big pull back and then just a straight rip higher. This is something that tells me that there is potential here for this to break out higher, but I would expect a pullback first, at least a small one. If it is a small one, and we don't see more than like a couple percent of a pullback, then I'd start to become more convinced of the possibility that this breaks higher. As we've seen before, I guess this chart goes back quite a while and is very, like, there's only one instance that the SPX to M2 SL, the M2 money supply, is basically it's S&P to M2 money supply chart is what this is. There's only been one instance that we broke higher than the levels we are at now, and that was the dot-com bubble. And you have to ask yourself, do we have the conditions that are similar to what allowed the dot-com bubble to really take off for that last move up that made what you would call a bubble? And the breakout occurred in June 1997. And just to look at the SPX, June 1997, to see where it was. That was right here. Yeah, right here. So we had another, if you got in at the end of that breakout, the market, the S&P, not the NASDAQ, the S&P had another 73% upside to go before it topped. So you were only really halfway through the big push up, that last big push up of the dot-com bubble when that breakout happened. So I don't think we have the conditions that would allow the same thing to happen here, but I could be wrong. So we just have to wait and see. From a technical perspective, this is all that we can really tell from this. My, I guess, expectation is that we move a little bit higher, maybe move a little bit higher, and then break down and have a bigger breakdown. Really, I want to see what the pullback looks like, and then that's when I would reassess. Okay, so I guess we move over to the Qs now. And you can see we made a new nominal high before we started petering out, and we're basically at all-time highs in the NASDAQ. Or we at least made it to just below all-time highs. What's interesting here is that, I guess, again, sort of my bias would be dependent on how big of a pullback we might get from here. If this kind of, let's say this chops around a little bit and then has, some sort of characteristic like this. You can see I'm making a head and shoulders pattern. Something like this obviously would probably mark a very long-term top. Something a little bit more shallow, maybe we just pull back to this trend line. Well, I don't think this is a trend line. This is me speculating on where, how high the next leg could be if this was a bull flag pattern. But let's say this is just a short-term pullback and it rips higher. We could say something like this, like a full-on melt up, move up. So let's see. This the NQ, I don't think there's really much to see here. You can see the long-term trend line or trend channel that I had drawn out here. We're basically in the middle of the range here. This was the 2020 sort of blow off top. We're kind of in the range here. Maybe looking at this chart alone, I think we have the potential to sort of meander our way up to the top of this channel at some point. And if we made it up there again, that would probably be like a high confidence area that I would start to look at a longer term top. Right now, all I see is just we're kind of in the middle of the range. NASDAQ to money supply. This trend line that I don't consider very strong because we only have really three reactions, one on the dot-com bubble, one at the 2021 top, and then one more recently, July of this year. We have basically broken just over it. I don't see, I mean, this could still break back under, I think, given the strength of this trend line. So there's not really a lot to see. I think the S&P ratio chart is more informative. The next chart to look at is the S&P or the NASDAQ to SMG chart, and this I think shows a little bit more. Last time I made a video, I think we were in the October 28th range, so right about here. I was kind of expecting that if this were a top, that it would at least, move up to these previous tops, and you see we've gotten that. So now I'm a little bit more confident that this might be a top in the ratio. At least we're probably going to get a pullback here, and then we'll go from there. Is it a longer term top or a short term top? And if it is a short term top and this breaks out, then that kind of, if we break out above this, that really does support the sort of NASDAQ or the sort of dot-com bubble type blow off top where the market just goes meteoric. Again, what would cause that? In the dot-com bubble, this was as high as the ratio got. So we're higher than that ratio from the dot-com bubble. Like the NASDAQ has just outperformed so much. Maybe you see a miracle in AI, like maybe just and like the 7 stocks or whatever that are related to AI just go to the moon. I guess you could see that as a possibility. Something nobody expects, I think, is what would cause such a big surge. The VIX is another thing to look at, and that's what we're seeing here. Last video I made, we were looking at a possible top in the VIX, and that did play out. Either a top in the VIX or, a big move up. We ended up getting the top scenario, and it's drifted all the way down to this trend range or this pattern range. So this, I think, is a more objective area to look for a market top once it gets down to the bottom here. And so that kind of supports that we're at least at a short-term top. If it is just a short-term top, then my expectation for the VIX would be probably a little bit of a pop. Maybe we stay in range for a little bit, and then we break down to these more historic, super complacent market levels. Maybe we drop down to the next level down, which would be around 1180. So not quite this low, but around this area. That would probably tell me that the market's ready to go higher. Otherwise, this could go at least to the middle of the range again. I don't expect it to make it there right away. And eventually, I think we're still looking for, you've got this longer term sort of downward trend line. Eventually that's probably going to break. I mean, it kind of has to, because otherwise VIX goes to zero. So once it does break, or once this trend line really breaks again, that's when you want to start looking for a big market volatility. And as I suspected before, once it really breaks, it's probably going to really break, and black swan event type stuff. But who knows how long that will take to happen. For now, we're looking at a little bit of a move up in the VIX if the market sells off a little bit, or a mid-range move up if the market sells off more. Let's see. IWM, I think, is the next major market to look at. This has been a little bit tricky. You can see we were in this on the hourly chart in a little bit of a, well, let's zoom out first. Let's go big picture first. We have this major area that was likely bottom for the IWM, or a likely bounce area for the IWM. The bounce played out pretty nicely, and not only did that happen, but it broke back above this trend line, which had multiple reactions. It also broke above this downsloping trend line. It kind of looks bullish from all perspectives. Short term though, maybe we have a pullback because it does look like, you know, a double top type thing here. There's plenty of gaps to fill. There's a gap all the way down here. Actually, okay, so there's a gap here. There's a gap all the way down here. Maybe we go down to fill those gaps. And the reason I am thinking short-term bearish is because we sort of have these two topping candles after a prolonged period of just sideways action, or with a prolonged period of sideways action between. Once we break below, you know, this isn't the cleanest trend line. Like you can see, we broke below yesterday and it popped, you know, gapped above. So maybe you have to sort of assess this and say, okay, maybe once we break below this, then that's probably more of a confirmation that we're probably going to get more of a flush down. And even if we get a flush down to here, I think the IWM still looks bullish to me. When does it become bearish again? Probably if we make it all the way down to here again, then it's like, okay, it made this huge rally. Maybe if it breaks down below this black trend line, that's where it becomes bearish again. And this trend line isn't the best or the most well-defined, but that's a point where, yeah, I would start to be concerned. Like if it breaks below the previous bottom or breaks below this black trend line, start to become rotate bearish on that. IWM to SPX, or actually, I guess, yeah, let's look at this. We're kind of, I mean, we dipped pretty deep. We dipped below any level since 2004. So the areas that I initially would have expected to bounce, we dipped below, but we eventually did get the bounce. And so the question is here, if we hold around this area and then pop higher, then bullish, from what I can tell. Like this to me generally looks like it's more likely to go higher than lower. But again, if it breaks the previous low, then I would not be bearish on the IWM. Or sorry, if it breaks below the previous low, then I wouldn't be bullish on the IWM. Other things that support being more bullish on the IWM are the fact that interest rates have stalled out. And we'll get into those later. They haven't just stalled out, they're reversing, they're going lower. We'll get into those as well, just not yet. I think the last major market index I want to look at is the Dow Jones. Probably ARK, or ARK, the ARK fund as well. But let's see. This is interesting. Okay. So this kind of long-term trend line, I don't love it because, okay, it has kind of one reaction in 99, two reactions, three reactions, and then there's been a lot of chopping above and below it. But we're kind of at the level where if there is going to be a pullback, I would expect it to be around here. You can see we've pushed above before and then a pullback afterwards. So maybe you even say, okay, this is the secondary level where you would expect it to top out, something like this. Yeah, I mean, it's kind of at the top of the range, hasn't broken above. I would look for a pullback around here. Again, I don't love this chart. This sort of up, down, up, choppy price range. It's kind of hard to tell what's going to happen next because there hasn't been, enough up or down action. It's just been a lot of sideways action. And it's the kind of sideways action that doesn't give me much conviction for a breakout or a breakdown. So it's kind of just been doing nothing for the past couple of years. If we look at the ARK fund, ARK Innovation ETF, ARK K, it looks to me like this has kind of been building up a longer term bottoming pattern kind of since 2022, June 2022. And there's been a lot of chopping in this range, but it's also around a range where it has chopped around a lot previously. So I don't see a lot here other than that it's broken above the previous this sort of trend channel, or it's broken back into this trend channel, which has sort of worked. It's not something I love and not high confidence because we got like one reaction, two reactions, three reactions, and then two reactions on the top side. So this angle of the trend line is useful, but there's a break. We have had a break back into it. We've also had a break above this major volume profile level and a break into this sort of upward sloping trend line after it's broken down. So all things that say maybe lean more bullish on this now that it's here. Now, how can this be bullish while the bigger market cap stocks are bearish? That's something you have to consider. Not all market sell-offs have to be inclusive. This could go flat while the rest of the market sells off, and I think that will be an indicator. If the rest of if the big cap stocks do sell off and this kind of goes flat sideways, that's a potential indicator that this will be one of the stronger, I guess, areas of the market going forward. If it sells off just as much or more than the rest of the market, then, probably not ready to be strong just yet. And if the entire market crashes, then I would expect this to maybe make another leg down with the rest of the market. There's a lot of stocks that aren't going to survive a major market crisis in the ARK investment fund, so that's the major risk, I think. A lot of debt, stocks that don't do well in high interest rate environments. On the flip side, markets bottom on when the news is worst for them. So if the worst is truly behind us in terms of the market, then this could move higher again. I don't think the worst is behind us, but that's my opinion, not really related to objective technical analysis. Let's see. Oh yeah, RSP. That's one more. This is the equal weighted S&P 500 ETF. As you can see, it did bottom back here when I made the last video. It's now near the top of the range. One thing I will say is the momentum has kind of died out. If we get a market sell-off, this is going to be included, but I wouldn't, there's not much to say given just this ETF that says, okay, it's time for the market to sell off. I just don't see anything in this. in this ETF that tells me anything. Like basically if this trend line breaks, then sure, okay, maybe it goes down to fill this gap, which is like 4% downside. That's about the best I have to say on this. Okay, let's look at the dollar index. I think that's important. Back here when I made the last video, I think this is the thing I was most wrong on, just because I had a strong opinion that it would go higher from here, and this was a bull flag, basically from this point. Obviously, it tried, and you know, you could argue, okay, it had a false breakout, and then it broke down. Oh, and that's something I want to, before we get to this, I am a little bit scatterbrained here, but this downward sloping trend line on the Qs was a big Q that, or a big indicator that maybe the market wasn't going to sell off like I thought it was. So let me just clean this up a little bit. These were the major trend lines you could look at the time. You had a break below this purple trend line, 3 reactions, a break below. That's when you might be most bearish, because it broke below a major trend line. Now it's going to sell off. When it recovers, that's a false breakdown, and it's common for the markets to break out in the opposite direction from there, and that's exactly what happened here. So, that's the kind of classical bear trap, or classic bear trap is what happened there. Part of why I was so bearish on the market and, got caught in that trap. So moving back to dollar index, since we are on the topic of traps, yeah, basically false breakout, almost a double top, and then from there it was more or less just selling. And we've sold all the way down to, let's see, the reason I thought this was kind of a major level is because we've had 2 major-ish reactions in the past few years. But, there doesn't seem to be anything big here unless maybe we end the week on it. But we've had a lot of chopping around this area, so I'm probably just going to get rid of that as a level to look at. What I'd probably be more interested in is, does it get bounces here? This is kind of the mid-level of what this pattern is starting to look like. This is speculative. I think there's potential that the dollar stops selling off around here, and we sort of make this big falling wedge pattern and consolidate maybe for even another year or so before another major move in the dollar. And that's kind of what I'm seeing is, okay, the dollar has sold off quite a bit. It's getting to the area where it should slow down, if not rebound, and we'll see what happens from there. But my bias is sort of shifting towards maybe more of a sideways to downward action over the next year or so, because we didn't get this breakout here. Could we still get a breakout? Absolutely. So if this turns around and then rips again, then, I might change my perspective, but we just haven't had enough consolidation here for me to start getting any sort of opinion. So there's that. If we go to the TLT, which is the Treasury Bond ETF, Government Treasury Bond ETF, you can see we did get that bottom around where we expected to get it. We also have moved back up to the top of this channel, and I think this is going to be really important. There's 2 things to point out here. Is one, does this stop here, consolidate a bit? And if it does consolidate a bit, like if we get a rejection here and a pullback, then that would correspond nicely to a greater market pullback, right? I mean, I think the market's been largely rallying on following bond yields, which corresponds to rising TLT. And if we get a pullback, then market should pull back as well. Other thing to point out is this is the largest volume area ever in the TLT at this bottom, which means investors have been very, very confident that this was the place to buy, and big volume came in on that. I think some traders capitulated, other traders did major buying. So my feeling is that this is a major bottom in the TLT, and any time it goes near that level again would be met with further buying. If you look at the 10-year yields, oh yeah, and if this breaks out to the upside, then that's a major change in trend. And maybe I would expect a move up to this previous sort of major consolidation level, somewhere around 15% if we do break out. Ten-year yields, as you can see, sort of in a way, the 10-year yields and the TLT are kind of mirrors of each other, so charts are going to look a lot very similar. We did get a top around where I thought we might get a top, and now we're pulling back. We're kind of in the middle of the range. We're at a level where we're kind of at previous treasury yield support, or yield support, percentage support. We could get a bounce off of this, but ultimately there's potential for this to go sideways more, meaning maybe make another nominally higher high, or just retest the old high. But it's also possible it just goes to the halfway point, or gets a little bit of a rebound, goes sideways for a bit, and continues lower. There's nothing really to tell me that this is a major trend change yet, except for maybe this. It would be like intermediate trend change, is the fact that it broke down below the support level, but because it hit the top here, that's kind of what you would have expected before, or sorry, it broke down below this trend line. It's hard to tell where the trend is going to go next. All you can say from this is that the intermediate trend has changed. The trend that lasted from May to October, and that gives you that is an inflection point in the market. If you go over to 2-year yields, you can see this area where I thought they would break down. It did actually break down, and we've gone quite a bit lower from that point. The next stop is probably a little bit of grinding around here, and then I would think it goes down to the bottom of this trend channel that was drawn out here, and from there maybe it breaks down. If you look at yield curves, you can see how we had this major pullback in the 10-year minus 2-year yield spread, and then we're starting to get a recovery. It also looks like, again, this should not be really, this isn't really a valid trend line because it only has 2 reactions on it. We broke below this and came back up and recovered it. So I don't think this is valid at all. Just get rid of it. But we did get a bounce here, and I think more significant is the fact that we had major support resistance level right about where we got that bounce. So my thinking is that this does continue because we did get this major trend reversal. My thinking is that we continue and don't really change trend again until we're at the D inversion point. And once we see that, once we get to the 0% difference between yields, then you might see another major change or major reaction from this. But basically, yeah, okay, to put things in fewer words, this is what I'm expecting. Okay, I think looking at junk bonds, this is another, this is the basically junk bond ETF price, which is inverse of junk bond yields. Most of this is no longer valid because of the way the price gets adjusted. But the major thing I am looking at, actually, no, it's because I was not in logarithmic. Okay, so if you actually go to logarithmic scale, we can see September we had a major breakdown below this trend line that had lasted since September of last year, and now we recovered it on the weekly chart. So does this mean yields or junk bonds keep rallying higher? It's possible. You could see also, this isn't a trend line per se, but a longer term sort of midpoint level or sort of middle area where you tend to get reactions is right around here, anywhere between here and here. So I would think that we would actually get a reaction soon. So we'll see if that happens. Overall, I do think that the next time this turns around and breaks down, it could be a worse sell-off for junk bonds. But there's really not a lot I can say technically here. Is this the right one? Liquid. Okay. So this is investment grade corporate bond ETF, LQD, or LQD. And after this major sell-off we had, we failed to make a new low in October. That's sort of where they bottomed. And now we're rallying right up to this major resistance level. So we have the potential right around this area. You could say maybe something like this has happened where this is broken above potential trend line. I don't love that trend line because it's not spread out that much in time, but you have a potential of a recovery here. We'll see where it ends up next. Again, I think this will follow the rest of the market, where if we get a gentle pullback and then it breaks above this support level or resistance level, then we'll probably get more of a prolonged rally, and maybe we come up all the way to retest this trend line at some point, which would be crazy to see. It's crazy to see how much sentiment in the market is changing. Like, I still think things in the economy look bad, but I guess, seeing 5% GDP, two quarters in a row, I don't think that's realistic. I don't think it makes a lot of sense, but the number is there, and that's probably giving investors a lot of confidence. Something's contributing to it. I haven't really looked into what is causing the GDP number to be that high, but it is very high. Okay, so we've gone over the major market indexes. I think it makes sense to look at the top market cap stocks next. So that would be, or at least what used to be the top market cap stocks. I still need to update this list, or I need to update this list. So it's actually the top market cap stocks as they are currently. This was valid maybe a year ago. Basically the Magnificent Seven. Apple, as you can see, broke out and sort of played out the upside scenario from the last video, and now it has stalled out. My expectation is we get some sort of pullback here. We got that gap fill here. We have multiple trend lines that have broken, shorter term trend lines. So this uptrend line has broken, the secondary uptrend line has been broken. It looks like a rounded top. My expectation is that it pulls back at least some amount. How much it pulls back, my thinking would be at least to support level, which would be around here, and then you would go from there. Again, because we're at such an inflection point in the market overall, I don't really want to go much further out than that because I don't really have confirmed bias on which way. Is this a long-term reversal, or does it do something like this and then actually make its way to that 200 level that has been so long anticipated? The other option, if it does have a longer, if it's a longer term top, then probably we're going to see something like this. Maybe it starts to look like more almost a double top, where it resumes its downtrend from here. For now, I would be just happy to say it's going to pull back a couple percent at least, 4% or so. Microsoft. This is interesting because you have this long-term trend channel that it made the recovery of one time and then failed, and now it's making a second recovery. And when you make two recoveries of a trend channel, either the trend channel is wrong or maybe it's legitimate this time. I don't know the statistics on it, but that's at least what I'm feeling. So we're just going to have to see. It's such a weak recovery here. It's just barely recovering. It's not like it recovered and then it ripped higher. If it suddenly does break out and rip higher of this smaller consolidation, this hourly consolidation, then okay, maybe it still rips higher. But my sort of thinking, given that the broader market is looking like it's ready for a sell-off, my assumption is that it's going to break down and it's going to lose this long-term trend line. And so maybe it continues chopping up for a while before it makes any decision on what to do. So yeah, I think I'm generally bearish on this. Maybe a pullback. It's hard to say. Maybe a pullback here to start with, 5% or so. And then beyond that, this doesn't even make sense to keep this here anymore. Yeah, beyond that, you'd just be looking at next support levels down. Google still looks like it may be in a topping pattern where we had this first sell-off, recovery, and from here I would be looking for a second sell-off. And you can see already, if you make an hourly trend line, okay, it's hard to make out a great trend line for here, but this is probably the best you can do. It's starting to break below that. It's starting to roll over. As it rolls over more, or as it rolls over, it probably, at least comes down to maybe this potential trend line, and then we'll see from there. Overall, I don't love that price action of Google in the past few months, at least not on the bullish side. Amazon, similar thing is happening where it's stalling out at a slightly higher high and at major resistance. So I would also expect a pullback from here. because it's stalling out an anomaly higher high, it seems almost like your best case scenario would be something like this. Best case bullish scenario would be something like this, where it just kind of grinds up for a while and then eventually, you know, makes another major move up or makes a major move down from there. So for now, short-term pullback. Tesla. Let's see. Let's go on the daily chart. So we got the breakdown of this sort of trend line or trend channel, whatever way you want to think about it. We got the breakdown. It made a bottom at this other potential trend line, and now it's at the top of the little trend channel it has been in. So this is another area where it could potentially roll over, make another low. If you're bullish on it, you'd expect it to maybe roll over, fill a gap, and then break out. I see, because it's already had 1, 2, 3 reactions at the top of this trend channel, I almost favor the bullish scenario, although it could pull out back first. Like I almost, if it is bullish, I would almost like to see a double bottom here, or some sort of nominally lower low, or some sort of false breakdown to the downside, and then that would make me a lot more bullish. So slightly biased to the bullish side, but still, maybe 40% bearish, or 60% bullish on that one. Facebook, or as it's now called, Meta. This looks more like a topping pattern because, gosh, let's just get rid of all this junk. Get rid of everything, start over. Okay. So just from a pattern perspective, one high, another high, looked like a double top, but it made even another high. I guess this is where you get the moment of truth. Does it just come back down, retest the double top, and then move higher? If so, then bullish. If it breaks, if it slices right through and comes down to the bottom of the range, then it looks a lot more like a topping pattern. And the bottom of the range would be something like this. So that's kind of what I'm looking for there, or seeing there, at least for now. Short term, it's clearly looking bearish, just like everything else. We're rolling over with sort of an hourly topping formation, rounded top formation. So, I mean, at least a few days of downside would be expected there, and then we'll see from there. Nvidia. So the last time I made a video, Nvidia's price was, let's just go back to daily. Nvidia's price was right here. It had just broken down from this topping pattern, but then just like the Qs, it recovered and it just ripped higher from there. Low volume, steady day by day buying on this. Now it's starting to stall out. You can see multiple trend lines have been broken. Now it's just kind of going sideways to down. My next expectation would be that this has another flush down, at least to the next major sort of level. So that would be either down to here, 6% or so. You have support here, so maybe less than that. Okay, if it finds and holds support here and then bounces back up higher from there, maybe it goes higher, more likely you at least come down and test this trend line. And this trend line goes back to last year, October of last year. We'll see. I'm not really sure about this one. It does have, triple divergent highs though. Well, triple divergent high on the RSI. So momentum is definitely weaker than I would expect. Like it did it barely make a new higher high? I think it did barely make a higher high. Barely made an all-time high, and then it stalled out from there. So that's never a good sign. But you still have time. It's just consolidating. A small consolidation period and then a breakout higher, bullish sign. Long consolidation period where it does nothing after it makes that higher high, that's bearish. So that's kind of how I see it. Okay, so I think the last area to go over would be commodities. And we're already almost an hour into this video, so we'll try to make it quick. Gold is probably going to be my favorite to look at, so we'll look at this first. Yeah, there's some other stuff I wanted to look at with some ratios, but I think that's just not going to fit today. Maybe a weekend video, and we'll just cover that. Who knows? So gold has been on a tear since really October, and it's just making higher highs. Come to think about it, this actually looks a lot like how some of the NASDAQ stocks or the Magnificent 7 stocks have been looking, where it made a high, slightly higher high, not a lot of momentum. But really, I think what it comes down to is pretty simple from here. We're running into, I shouldn't call it support. It should be a region of all-time highs. Let's just call it here, 2082. If we break above 2082, we've already had basically a triple top, and it's coming in for the fourth test. Break above that, and it goes ripping higher. That's my base case for that, for gold. It does have some support from the other precious metals, or so the thesis has support from the other precious metals. If you look at silver, it's basically in the same spot where instead of a triple top, you have a sloping line of resistance that goes all the way back to 2011. We hit it once, we overshot it twice in that sort of manic rally, hit it third time, hit it a fourth time. Now we're coming in for a fifth test. I really think, eventually this has to break to the upside. But we'll see. My expectation is a small pullback here and then a break higher if that's going to be the case. Gold to silver ratio. We're still consolidating. Nothing confirmed yet. Once we break below, then it's going to be fireworks. If we break above, then the economy is crashing. And the reason I say that is because gold to silver ratio is never this high. This 2020 high was the all-time high, at least as far as American history goes. We made a second high that we've only made a few times before. Yeah, basically 1, 2, 3 times before. We didn't stay above that. So yeah, that's why I say if we break above this consolidation pattern, again, or if we break above it, then that probably means the market is crashing. Everything's crashing. If we go to platinum, really what I'm seeing, I think it only makes sense to look at a longer time frame on this, just because it looks like it's been in a very long-term bottoming pattern, you know, major low, new lower, major low, and then higher low, and then slightly higher low. And now we're a little bit above those lows. If we go back to the weekly chart, if we, it looks like we kind of had a false breakout once. If we come back to retest this trend line and break out again, that shows that this is still strong. Like, even though we had a false breakout, there's still strength here. It's giving it another try, and it's probably going to be the real deal the next time it breaks out, or this trend line is just wrong. Like, you're never wrong as a technical analyst. You're just it's just that your lines are wrong. Okay, or I guess the pattern never fails. It's just that you saw the wrong pattern. That's, I guess, more of the joke that I was trying to go for. Palladium. We've been in this sloping or this downward trend line for a long time. We broke the low and then recovered once. To me, that's an indication that it's starting to try and find a bottom. But it could be a long ways out. I wouldn't be too confident in, you know, saying this is the time to go long here. If it made its way all the way down to this $900 area, then I'd become much more interested in it, because we've got multiple major levels of support. I guess 1-2 major level of support, and anything below that, like the 835 area, that's like super. I would be pretty confident that that is the ultimate bottom, just because you've got even more support down there. So starting to get interested in it around the 910 level, and then like super interested around 830. Anything below that is probably going to be very, very short-lived. Okay, so other commodities that are important. Uranium, I don't really think this is too relevant to the way the economy is going. It looks like it's probably forming a topping pattern here. Probably going to get a much larger flush down to one of these other major levels of support. So that's something to watch. Let's see, lumber, not too much to see other than it looks like we had a major bottom back in April of this year. Soybeans are looking kind of complicated. I mean, well, in that it's just up and down, bouncing around. We may be breaking out of this sort of falling wedge pattern, or this, you know, sloping downtrend. If we do, then probably expect some upside in soy. Corn, we have this long trend line that we have broken below. That's interesting to see. Okay, so we had what looked to be a breakout, and then, or breakdown of kind of support, and then today, as the market opened, major rally, major gap up. So this could turn into like go from given what just happened, this could have been a breakdown yesterday, and today it looks like a double bottom. So commodities are always more messy than other. Well, I wouldn't say they're always more messy than other stuff. They just, at least in this case, it's finicky. Oats, I don't really see much here. Wheat, it's been in a long downtrend. I think it's gotten hit more than most commodities. But you can see it's still kind of in range. Like the major upward sloping trend line, it's not really near that. It's just sort of in no man's land. So I could see it downtrending for a while longer, or going flat, sideways. Sugar has been on a tear, but it looks like it's stalling out in terms of upside momentum. So maybe we see a pullback from here. Rice. Do we even want to look at rice? Rice is so uncorrelated with everything else. I'm just going to completely skip this. Let's see. Coffee. Don't care. Cocoa. That's insane what it's been doing. I don't think this is a sustainable move up. This is like bubble type territory. Cotton. Live cattle. That's really been on a tear. Lean hogs. A little bit more reasonable. Copper. This is kind of important, and it's important because it looks like after consolidating since February 2022, it looks like we might be starting to see a breakout here. But again, like depending on how you draw this trend line, maybe give it a little more time before you say it's a breakout. I'd rather see it, really break out and then back test, and then you can say it's broken out. Just because it's not the cleanest trend line ever. And because the way it got up above this trend line was a gap up. So not super high confidence, especially with the sort of economy looking weak, but that's sort of been the theme everywhere is the economy looks super weak and then everything rips higher. So maybe that's the market's way of saying, at least from a monetary perspective, what the government, what the feds, or what the central banks are doing maybe at an inflection point. And that's, I think, really what the market cares about is no one cares, I guess there are certain stocks that care about how strong the consumer is. There's a lot of stocks that drive the market that don't care as much. And commodities prices don't care. So if this is breaking out, that is something to watch for as a potential inflection point. Zinc, really hard to say here. It had a huge drop in price, enough of a drop to where you would say it's, at a potential bottom around here. So maybe it just continues this bottoming pattern and eventually breaks out to the upside. Steel ETF has refused to have a bigger correction. Other than that, it's just consolidating, break to the upside. Maybe it makes another move higher. Otherwise, this would be basically a triple top, and you would see another flush down. Alcoa, let's see. Let's just go to crude oil from here. This is the interesting one. You can see it's had a flush down, but it's at major consolidation area. And you can see how it's made. Okay, so it's made basically a double bottom back here, and then higher low, higher low. So is this trend changing, or is it just an intermediate bounce? That's, I think, what you want to watch out for. Is this an intermediate bounce? It looks like it's forming an inverse head and shoulders, which kind of hints that it's going to be more than just a little bounce. it could move higher, and that would be the higher low there. So basically, if I'm looking for it to still be bearish, maybe it does something like this, where it continues. I don't know where I got this trend line. I think it's just a potential trend line. Let's just make it dotted or dashed so it looks like a potential trend line. But a slower grind down, or does it find a bottom here and break out? I don't really know. But what you can say is this is a possible inverse head and shoulders, which would bring oil a decent bit higher. And I think the reason oil is so important is because if we are heading into recession, this is kind of a leading indicator of a major drop in demand if oil continues to tank. So it is important to keep an eye on this. On the monthly chart, we're basically at the end of the month. We got like one more trading day. And this is close enough to be considered a potential bottoming candle. But you can see you've had a lot of other candles like that on the monthly chart for oil, and they have meant nothing. So yeah, all eyes on oil, given that you don't really see where it's going. I think if it breaks above this, that's more of a significant sign. Breaks above this trend line, that's more of a significant sign that it may be headed higher. There are some oil ratio charts that we could look at. Okay, oil to M2 money supply. What you can see kind of clearly on here is two things. One is that this long-term downtrend line is, if you can even call it a trend line, because the reactions aren't very clear. This general trend-ish line, we almost hit it coming down with this sell-off a couple months ago, back in March. The other thing is that this trend line, which I think you can say is a valid trend line, had a small false breakdown, and then we're back above it and, sitting right there. If we break below this trend line again, then we're probably moving quite a bit further down. Otherwise, I really have no idea. And that's the main one I probably care about, is at least right now. Maybe one last thing we'll look at is natural gas. And you can see we've kind of been in this uptrend line, or upward trend channel, which we have recently broken down out of. That's another potential recession indicator, is the fact that we're below this major trend-ish line, because it doesn't have solid reactions along the way. We tried to break above, and now we're below again, and now we're below this other trend line. So seems to be hinting that we have another flush down coming in natural gas. Now, if it does get down to this level again, to me that's a major buying area. Although, one of the questions is, how do you play natural gas? Like, that it can only sell off so much. Demand for natural gas isn't just going to disappear forever. It disappears for short periods of time and then it comes back. But how do you play it? The ETF, like, UNG ETF is so volatile that if you hold it for more than a couple months, then you're going to need like double-digit percentage increases just to break it even. It's a lot of decay in that ETF. The same with playing calls, the same with playing futures. There's decay in all of them. But if you can find a good way to play natural gas and it comes down here again, then, probably objective area to buy. Coming soon. And with that, that's I think the major things I wanted to cover. Again, the video is pretty long, but hopefully we'll get better about that as time goes along. Thanks for watching. See you next time.